Hello everybody, my name is Glenn Tompkins, Senior Instructor here at VectorVest, and welcome to our next educational tutorial video on Comfort Index. Comfort Index is just like its name says. It's a little level of comfort in being in that stock. Comfort Index looks at the stock's ability to withstand long or lengthy price declines. So what does that mean? Well, in essence, I'm looking for stocks with a high comfort index that go up more than they go down. Or if the stock does get hit by a pullback, it is resilient enough to pull back but come right back up and continue to move higher. Those are stocks that you want to be in. So Comfort Index plays a big role in understanding if it's a stock that you really want to hold on to or not. A stock that's got the ability to go down, because every stock does go down at some point in time. I don't care how good your stock is, it will be subjected to a pullback. Well, Comfort Index shows you stocks that are able to sustain a little bit of a comeback or pullback and then resiliently rebound and keep going higher. So Comfort Index is a smart indicator. Let's get into our watch list. The same stocks that we've been looking at for this whole series. Okay, and the reason why I picked them is because these are stocks that people do know. We've already talked about value and understanding if your stock is under or overvalued. We've looked at relative value, stock's upside potential, relative safety, the consistency and predictability of a company's financial performance, along with the risk factor of the stock, RT, if the stock is moving up or down, and how fast based upon how far above one it is or how far below one it is, VST, which is our master indicator of wrapping up relative value, relative safety, and relative timing into one indicator to give you a full picture of how good that stock really is. And you know something? You can use that VST to track a stock that's a $5 stock compared to a stock that's a $50 stock to give you a better representation of which stock really has the better fundamentals / technicals. Looking at a stock's VST is awesome to know whether or not you should be in that stock or not. And now we're going to look at CI, that comfort index. The stocks that have a high CI, above one is favorable, below one is unfavorable. High CI stocks are, layman's terms, stocks that go up more than they go down. And if a stock continues to go up, that makes it attractive to investors to want to buy, right? So Enphase has a CI of 1.78. That is great. The stock does have the ability to go up more than it goes down and nicely above the value of 1. Advanced Micro, even a tad bit better than Enphase as far as its ability to withstand long or lengthy price declines. Apple has a CI of 1.63. So what we're looking at is if we were to look at a graph of these stocks, looking at them go up, even with the red bars as we look at candlesticks, there's not a lot of red bars continued in that upward move. These stocks go up more than they go down. Boeing, CI 0.52. This stock is susceptible to pullbacks and long or lengthy price declines. So if I look at a graph, and I know that a graph tells a story, right? Well, if the CI is at 0.52, this stock has been hit and it hasn't been resilient enough to continue to move up. Or at some time it will, but it is susceptible to a big pullback, as well as Sprint. Even worse than Boeing at 0.34, this stock will pull back a lot more and stay further down a lot longer than the stocks at the top of the list. So CI, Comfort Index, lets you know if a stock has got the ability to be resilient enough to pull back a little bit, but then keep on rising past the prior high and continue to make new higher highs. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.